Okay, earnings season is upon us, and typically, when you're looking at various sectors, your outlook or really what you're going to focus on in their earnings tends to vary, right? Typically, we kick off earnings season every year with IT and banking because they're the first to report, and arguably, they are the most integral to the overall market ecosystem, both in terms of market capitalization as well as news flow, as well as they both play a critical role in the growth of our economy, right? Without credit and IT services, which are India's biggest exports, it's really difficult to grow our economy. So today, given that banking earnings season is upon us, we've now heard from Federal, we've heard from HDFC, we've heard from South Indian Bank, but we still have a large pool of results left. We have to hear from ICICI, from Axis, from SBI, from RBL, from AU Small Finance, from IndusInd. So a lot of big banks coming up with their earnings. So we at ET now thought it might be a good idea to walk you through what are the key line items that one really needs to pay attention to when analyzing a bank, right? So I'm going to begin with the most basic thing, which is your credit growth and advances. That's basically showing how many loans the bank is giving out. The next thing would be your liability franchise or the deposits, which is basically how much money is coming into the bank via people depositing their funds into savings accounts. So these two play a very crucial role and have a good relationship with each other, because if you don't have money coming in the form of deposits, it's very difficult for you to loan money out. So it's always a very delicate balance that has to be struck between these two, and essentially neither can really work without the other, because if you don't have credit growth and you have a mounting pool of deposits which you have to pay interest to your depositors, then your bank is unlikely to make a profit, right? So they're both interdependent, if I might say that. Now, the next thing to look out for is asset quality. So a bank loans out money to everyone, but before doing that, they conduct studies and they look at the credit worthiness of an individual, whether this person can actually refund or pay back the money timely. So that is called asset quality, and it's usually measured by NPAs, which is a figure which tells you how many people have defaulted or are unable to pay or are late. And the higher this number goes, the worse the asset quality of the banks get. Now, when this happens, we use something called a provision, which is basically a loss that the bank takes on its P&L for that period in order to compensate for these accounts which have potentially gone bad. In the event that one of these accounts does go good, then that amount is written back and is added to the profits. For now, as a measure of prudency, it's deducted from the profit figure each quarter. That is what we call provisions. So these are broadly the main things to look out for. Then you have things like net interest margin, which show you how profitable a bank is. You also have fee income and treasury income, which shows you how well the bank is monetizing its stake in various assets. Also, how much fee income is generating from online transactions, digital payments, bank transfer, IMPS, NEFT, credit card fees and transactions. So these are broadly the things to look out for. Keep an eye out for them this earnings season.